Hello guys, this is a trade of the day, and today I'm actually going to start a new playlist called Missed Opportunities. I was thinking about doing this, kind of going back and forth, should I do this or not? But after kind of careful thinking, I think it will be great idea to kind of learn from missed opportunities because sometimes you kind of miss your entries, and it's all about the entry when it comes to trading. Because if you don't enter in the correct reward to risk, then you're gonna risk too much for too little. You know what I mean? So it's not even worth the trade. So it's very important to kind of be ready and kind of pinpoint what are the spots to kind of enter your trade where you have a maximum amount of reward versus the risk you take, and also the highest probability for success. So um, all right, so that being said, I'm gonna go over today's trades that I actually missed. If I would have taken these at those spots, I would have made some decent gains. So I was actually looking at a couple trades. I was looking at Palm, PULM. I was looking at CARA, EMES, CSX, and LNG. These were all trades in my watch list, overextended stocks, tickers, trying to get my levels to kind of short. But going over Palm, I did not trade Palm because it actually didn't do what I was expecting. It kind of broke out previous day high on strength. So bulls had the advantage here, upper advantage here. So didn't want to short. There was also no shares to short, so it was just not even waste my time to kind of look at it. Now, it is coming down, and it might break over below this base right here. So if it breaks below that, it may start coming down and reversing the momentum because of its lower highs and base. So we'll see what happens. I will look at it, but hey, there's no shares to short, so I really can't do nothing about that one. Next, it was CARA. CARA has been running pretty much upwards since January, beginning of January, and it's just kind of going up and up and up. And the last 3 days, it kind of just been moving pretty high up and high volatility. So today was a good day to kind of go short, and I kind of missed the opportunity. Actually, on CARA, I was looking for pops towards previous day high, but I was looking for hopefully it could break over previous day high and kind of create sound kind of like a wall and then a base to break, which is kind of like my bread and butter to kind of short on, but it didn't do that. It actually kind of just failed right away. It popped close to previous day high and it just flushed. I went red right away in the first 5 minutes, but then it bounced back and kind of hit the VWAP. Went green again, so went red, green, and then it went red. So that was where I should have gotten in. That kind of shows you that hey, this kind of stock is losing its momentum. I went from green to red, then bounced back green, hit the VWAP, below the VWAP, and it's going down again. So that's where I missed my entry. I should have gone in previous close around 1374. Maybe I should have gone in around 1373 if it broke below 1374. With my risk a high day and and look at my targets for the next support level. So next support levels, as you can see, I kind of already typed in. It was 1355 and 1350. So it kind of bounced up 1355, but it went down to 1350, and that's where it held the support and bounced back up. Now there was an opportunity for a second entry here, and that was when it went straight and when it went kind of parabolic towards the VWAP. That was again a good opportunity to kind of, if I missed the first entry, I could have gotten the second entry there. Shorted that with again previous day high, or even at this level, at this lower high, which is around 1381. And I was looking for maybe a fade below 1350, but it didn't go 1350. They kind of like held. It created a higher low here, as you can see, and it bounced back up towards previous close, and it created another higher high here, and then higher low and higher high. So when I saw that, I mean, in a way, I was actually thinking of even shorting here, but I'm glad I didn't because, again, it was creating higher highs and higher lows. So when you see that, again, momentum is shifting, and this thing might get bullish again. So good thing I did because the reward to risk was not worth it. Even though it kind of did fade close to the 1360s, the risk to reward was not there. And this is not even 1 to 1, so it was not there, and it kind of just and it spiked really hard here, so it was not worth the risk. So that was CARA. That was the first one that I kind of missed. Hopefully on Monday we get an opportunity to short because it is kind of bouncing back up. So this day of reckoning is coming soon. It's just these support levels right here at 1355, 1350. They're kind of holding it up, but I think they're gonna break, and the next support level will be like at 1297. So we're looking forward to those things to break. So the next one that I kind of missed was Amis. This one, again, similar to CARA, has been moving up since early January, and the last 3 days it kind of just up, 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 and high volatility and volume. So today was the day that I was looking for reckoning to short. But I was looking for it to do something else. So that's why I didn't short it, because I was kind of hesitant. I wasn't sure what was gonna happen. But now after looking at the chart, there was an opportunity to kind of get in. But I was actually prepared. I had a different plan for this ticker. I was hoping in the intraday, because it kind of closed with kind of strength. If you look at how it ran yesterday, it kind of closed on some strength. So I was hoping then pre-market there might be some sort of morning squeeze with high volume, and then maybe lower highs, and I could hopefully short at the open with risking at the pre-market highs. But that didn't happen. There was literally like no volume pre-market, as you can see. But now looking at the chart, there was an opportunity to get in, even though I didn't see that pre-market. Now it was similar to CARA. It started green and gapped up over previous highs, which showed strength, but it didn't hold. It literally just went down, and you can see this bluish bar. This is the previous close, so it went red right away, but then it bounced off the support at 1817, and it went green, and it actually broke out previous day high all the way to 1896, but then it couldn't hold. There was big sellers. You can see these big bars, 26,000 shares. That's a huge seller right there. So I guess an opportunity for short sellers to come in big on it, and then it broke below previous day high and it went red. So that was my opportunity to kind of get in below. I guess you could say 1846. That was where I should have gone in. Bursting at previous day at actually at high of day, and I should have just held it there. Because it did fade it all the way actually to my levels that I was looking to cover. So it went down to 1817, and from 1817 straight down to 1790, even below that. And that was pretty much it. This is definitely a 2 to 1 rewards to risk. You're risking from what is it, 1846 to 1890. You're risking almost close to 50 cents, maybe 45 cents, to gain from 1846 to 1776, to maybe get like 75 cents, something like that. So it's definitely close to the 2 to 1 reward to risk. So that would have been the perfect spot to get in. So I missed that one. That's okay. Sometimes it's hard to kind of see this. Especially when these stocks are volatile. If you're not if you're not paying attention, you will miss it. So I mean, I wasn't expecting this, so that's the reason why I kind of just didn't pay attention, because I was expecting something totally different. But now I know when I see something like this, open green and go red, then go back green, then go red, that's when I want to get in. I want to get in on the moment it goes red, so I can have the highest, reward to risk. And it's all about the entry. Because if I were to enter here at 1817, I don't really have that much room. This could have easily just bounced off 1819 back to VWAP or back to previous close, and I would have been risking this, like what, 70 cents to make maybe 25 cents. So that doesn't make any sense. So that's why I didn't get in, especially when it went that. So the time the spot was around 1844, 1846 to kind of short and go in. So that was Emmys. The next one that I missed was CSX. This one again has actually been going up the last 4 days steadily, slow. I mean, it's actually a heavy float stock. It has 931 million shares, so it doesn't really move that fast. It's kind of like a steady move, but again, it is overextended, and a reversal was just a matter of time. And today was the first day down. And yesterday was actually a lot of volatility. So when you see kind of a lot of volatility like this, like these type of moves, like kind of like a parabolic move at the open, then it literally fades all in mid morning and it kind of bounces off. That kind of tells you, you know what, this thing is ready to kind of reverse its momentum. So, and this trade, I was kind of looking for kind of like my bread and butter type of trade. I was looking for a pop to high day, and kind of like and kind of fail, even over a high day and kind of fail and create a base to like a short on and then short towards hoping for the green to red move. But it didn't. It kind of opened gap up a little bit over previous close, below previous day high, and it kind of went red on low volume, and it actually went red, but then bounced off green, and it really just went red for pretty much like a minute, literally a minute, and it went green, and it was all low volume. But when I missed the entry here when it decided to go red again, so that was the time I should have gone in. Again, risking on previous day high because it created a lower high. You can see high days like around 48.94, and then kept creating lower highs here at 48.84. So when I saw that, especially when I saw this huge red candle, I knew the reversal was coming, momentum reversal, and when it ran red here, I should have just gone in, risking a previous close. I mean, excuse me, previous day high. I mean, high day, excuse me. So I will be risking pretty much from 1890, 4890s to 4860s. So 30 cents to make. Again, my support levels were right here at 4825. So from 4860 to 4825, we're talking about 35 cents right there. So this is kind of like almost like a one-to-one, but I was kind of looking to hope to break. So maybe closer to a reward to a 1.5 to 1. But later on, it actually, if I were to hold, later on, it did go to the actual spot that I wanted to close, which is 47.84. So if you look at it, I was risking 30 cents from previous close at 48.60 to 40.90. And if you look at it, 40, 48.60 minus 47.84, which is actually a target that I was really looking at 76 cents. So I was looking to risk 30 cents to make 76 cents. So that's where the reward to risk, 2 to 1. So reward is 76 cents, which is bigger than 2 to 1, which is 2 to 1 is 60 cents to. I'm risking 30 cents to make 60 cents, but in this case, I was risking 30 cents to make 76 cents. So that's a perfect trade right there. There was a second entry here on the bounce to VWAP. That was the second entry, similar to CARA, where I could have got in again, risking a high day and hoping for a break of 48.25, going toward 47.84. So that would have been the spot to kind of get in, literally at the VWAP, a bounce to VWAP, and kind of get in, and hoping to go to the next support level. But I kind of didn't go because I wasn't expecting to do something like that. But and it's also kind of hard to risk to kind of go in at the second spot because You miss the first spot, so kind of go in the second spot is like, I kind of don't want to. What some traders do is they actually use house money to kind of get in the second time. So let's say they shorted here, risking 30 cents, and they made maybe 41 cents to cover around here, and then it bounces back to here. So they actually end up risking what they made on the first trade, based it on the high, and then they later ride. So they kind of, in case it does go against them, hey, they don't really lose anything. They're just risking what they want in the first one. But if it does fade, they just maximize their profits, to maybe way above 2 to 1. So that's risking house money, which is pretty sweet. Because if you get it right, hey, I mean, if you get it right the first time, you actually could just risk house money and make an opportunity to make more wins. So not a bad trade overall. I missed it, but good learning lesson. That's the reason why I'm starting this new playlist, missed opportunities, because I feel I could learn a lot from them, and you guys could learn a lot from these. Because hey, sometimes you miss a trade. Sometimes the setups don't work exactly how you want it to work, but there are entry points, that you want to kind of pay attention, very close attention to, where you could get in, where you have the correct reward to risk. Again, it's all about risking $1 to make $2, risking 30 cents to make 60 cents, risking 15 cents to make 30 cents, risking 10 cents to make 20. Risking 100 to make 200, risking 200 to make 400, risking 1,000 to make 2,000, or close to it. It's never going to be perfect, but it's all about risk management when it comes to trading. And the entry, it's so important, because if you don't enter at the correct spot, you may be risking too much to gain too little, or you know what I mean. You may be risking one to make zero point 0.5 or something like that, and that's not worth it. Don't even trade that. So hopefully you guys learned something. If you like this video, if you learned something from it, please like it, share with your friends, make a comment, and also subscribe to my channel. And you guys will hear from me soon. Thank you.